So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 Pips, rocking and rolling here, 13th of August, 2020. No trade calls or recommendations. Are responsible for their own stuff. We're here for educational purposes only. Sessions are recorded. You'll get an email with the recording as soon as it's over. As long as it's for your own personal use only, nobody will be blocked, nobody will be banned, and we'll all behave as one big happy family. So, let's do this. Any comments, any questions? Let's just do. Somebody remind me later on, we'll look at the banks because we had some interesting action here on the banks. So just wanted to do a little bit of a recap on FX here on the dollar. Now, to a certain extent, we haven't really gone anywhere. We're just seeing this kind of corrective phase, right? And remember that sometimes basically we'll cover NQ in a second. Sometimes markets can't correct sideways, right? So here what's happening is much to do about nothing as we're wheeling and dealing here. We had a lot of Trump comments on the dollar this morning, but right now this is one of those situations where we just have to be patient, right? Because the big question is, right, and also in line with what we were expecting, we're expecting the dollar to put in a bottom here and see a bounce at least back into the 94.60s, possibly all the way back into the 96 level, even though we're still looking for this to stay heavy and continue to move down. Now, what is happening here is that it's gone nowhere fast, even though it has base. So the big question is this still trying to form some kind of a base to go higher? Or is this just correcting sideways, right? Resting, building up some energy to then break down aggressively. So right now, what tends to happen with with these patterns, and when you see the market trade like this, is that the next move can be quite explosive. And again, it doesn't have to correct up or down. It could correct sideways. So right now, what you want to look at is essentially these are two huge pivotal zones. You don't want to be caught off guard here, but the closes above or below are going to be very important. Okay, so what that means is that any move into here is still going to be interesting potential buy. Any move into here is still going to be an interesting potential sell, but unless we get daily closes outside this range, essentially we don't have an awful lot of new information. Now, so the way I would treat it, especially if you want to have a non-biased approach, non-biased view, is that this is just, don't get confused by velocity of move inside range and treat this as a range. So it's a range until it breaks. So as long as this stays here, you'd be looking for tight asymmetric opportunities to sell the upper end of the range, or tight asymmetric opportunities to buy the bottom end of the range, and only on a day close below or day close above, then you would expect to see continuation either side. And what that means is that we're stuck in these holding patterns across the board. So you can look at as many charts as you want, you can slap as many indicators as you want on there, you can drop as many time frames as you want. It doesn't change the fact that we're going sideways, right? And looking at the euro, no surprise, right? Mirror image, but it's exactly the same thing. You have to be patient. Looking at cable, again, it's not rocket science. Don't make it harder than it should be. So here, could you argue in all of these that we're putting in some kind of a top? Sure. Could you argue that you're basing getting energy to rip higher? Sure. Be people talking about topping formations, about different kind of topping formations. There'll be people talking about bull flags, etc., etc. Really, the way we look at it, we try and keep it as simple as possible. And if you have a bigger picture view, that doesn't change, right? It can't change. But if you're just looking at this as here, it's range until that range breaks, right? Our highest conviction trade here remains, looking for this dollar correction, is the Kiwi to the downside. If you remember, so we've gone through all these trades, but what we liked about the Kiwi was not only the fact that we were stalling at a new low. But here, these weekly negative close where we got a second one in a row was also coming in line to August, which traditionally is a very bearish month, seasonally bearish month for Kiwi. It's the worst month of the year for Kiwi. So those things coming in line with also the technicals and some of the intramarket correlation said, if we were looking for this correction in the dollar, right, our best way, our favored way to try and play this would be in terms of specific charts would be the Kiwi chart. And here, it looks like it's trying to get traction, and the key focus on Kiwi is going to be how we behave around this 65 mark. Does anybody have any questions here? Now watch the 65 mark not only from a dollar close, from a day close perspective, but also on the week is going to be very important. Now, before anybody reminds me, I know I always talk about this. Kiwi's not in the dollar index, okay? So, but here this is just the in the broader theme of the dollar correction we were talking about. So here I still think this is the most interesting. And again, you can look at the day close base around this. It was 65.00. Here we've got the 50 moving average. What I'm particularly interested here is the week close, because we could get a situation where if this plays ball, we'll not only get a weekly close below the 10-week, but also below the 100-week moving average and the 65. So that would be very, very interesting. And there, assuming other things start to come into play too, then we could look at acceleration move back into that level. So it's a very, very, very similar chart across the board, even if you look at Aussie. Again, on Aussie, also because on how gold was behaving, we're not we didn't really like this. We preferred to see this rip higher and fail at the 200. Here, this move's being a one-way street, right? You see how after we ripped here, you had very technical and a lot of energy here, all positive closes. Just seems like stopping a lot of people out, coming all the way back into here. So ideally, what I'd like to see here, and maybe if here we get a squeeze higher on NASDAQ, squeeze higher on equities and in risk in general, maybe we do get this push and then a failure here, a negative close on the weekly. That would open a lot of nice little room for a correction here if we get a negative close on the weekly. But again, it's starting to look a little bit late for this. USD JPY, it's not loading. Let's see. On stocks, USD JPY. Here, not a lot going on, right? Our base case was all those shorts looking for these lows to clear unfinished business, and we still feel there's unfinished business here. And what we were looking for was for a correction where we could get back short. Here, as we mentioned, intraday, there have been some interesting opportunities. You see how it's fighting here at the 10-day, but I would much prefer to let this come back all the way into 108, 109. And get an opportunity to get back short there for a retest of those 104s and maybe a little bit of a flush. But right now it's very choppy. I mean, I can't stress this enough, guys. Normally we're on holiday this week, right? We're just doing the sessions. We're doing shorter sessions simply because with COVID, etc. I'm not going anywhere. I'm in front of the screens or I'm around, so I might as well do little updates. But really, this is a holiday week, and as we've been discussing, our theme for this week is to see if there's something tactical around London Open, then see if there's something tactical around New York Open, and see if there's something tactical around New York Close. But really, hit and runs are more than fine, and a couple of scalps here or there. Even if you could just scalp 5 points on the ES, 10 points on the NASDAQ a day, that's a perfect week, right? Especially in this thin liquidity kind of chop. So here we'll have to see what happens, but essentially I don't see anything majorly new on the FX side. You see how here also on Swissy we're stuck, right? Big level, very, very big level. Here, what you want to see, if this is a flush, the way this will tend to trade is flushes below, and then it closes right back above, and then it's unable to attract new sellers below these previous lows. Now here what's happening is you see how the break through those lows is defended, right? It's really defended. So this is not a situation where you want to get long at all. Now, does this mean that there aren't going to be interesting longs? Absolutely not. But the way we look at the market, as long as it's able to stay below these lows, we have zero interest in trying to catch a falling knife. Now, because of the velocity of this move and how aggressive this move has been and can continue to be, sooner or later there'll be a correction which is just as explosive and just as aggressive. But in this scenario, we rather wait for it lower or trade it higher. So paradoxically, right, for us, the longs are much lower or higher. And here what I would say is, again, any kind of action where you see the dollar firming up across the board and any kind of pop back into above this area, right, then it's interesting. Then it's going to give you something to trade against in terms of your stop, to play for some kind of a correction to the upside. But right here, no real interest in doing anything on USD CHF. And I think the last one, I think we've covered pretty much all the other big ones, is USD CAD. And here USD CAD also, with all the shenanigans on crude, as we said, zero interest to do anything here. If this was going to catch a bid, and if this was going to, give us a nice long opportunity, you'd expect it to hold this retest of 134.20s. The fact that it can't hold this, it looks like Aussie, right? It looks like it needs to cause some pain. It needs to clear some stops below this 200 week, maybe below the 131. But again, I have zero interest of getting short here, right? You're not going to get short into a brick wall. And here you've got the 200 coming up, you've got the 130, and then you've got this previous low here. So zero interest in trying to get long into a brick wall. But equally, unless I see some kind of basing, I have no interest in trying to get long here, right? So here, paradoxically, the shorts would be on a break lower and a retest here, or the longs would have to be, either higher or on a break lower and a failure to hold below. So again, it's a very, very similar chart across the board. It's very messy. A lot of it will likely depend on what happens on the metals and on indices, right? So let's look at indices. Let me stop the recording for YouTube here. We're like about 13 minutes, so it should be not too long to upload. Let's look at some